looking at Pfizer's quarterly earnings, which were just released. Commodity had a pretty good quarter. I guess there was some catch up from last quarter, and there's a bivalent update to the vaccine, so pretty impressive result there. It doesn't look like it'll last into 2023 as they're guiding a pretty ugly 2023, but the Q4 was amazing. So we got Pfizer, market's just opening now, so maybe we'll keep one eye on that if we can. Paxlovid had a rough quarter. Not going to be a smooth landing there. You can see that they, from the spreadsheet, maybe you can't see the spreadsheet. Hold on. Paxlovid got off to a good start. First real quarter was $1.5 billion, then $8 billion, then $7.5 billion, and now we're down to $1.8 billion. So really ugly landing for Paxlovid. Although one must ask, how large did you expect this drug to be? But I thought they would have a softer landing than that. I guess with COVID disappearing, do you really need a COVID antiviral? Probably not. So, Paxlovid, we'll get to their guidance in a second. In fact, maybe let's go to the guidance now, because it was pretty, I think it's probably roughly in line with what people thought. It's probably a tad disappointing. I think some people, Pfizer bulls, probably thought we'd see more of a steady drop-off in Comirnaty, which is their brand for the COVID vaccine. But it looks like Pfizer basically is saying that don't expect much from Comirnaty in 2013. And, of course, bulls would say, well, they're being conservative. But I think the reality is they're probably not being too conservative. They're probably, let's see, my estimates are a little effed up because of the last quarter, but that's roughly what I was expecting. No kidding. That's a funny guess because I was just guessing. I bet something in this territory. Maybe less. I think I had a smaller number actually. Let's see. Yeah, I was probably more bearish than most. But Pfizer is saying they'll sell $13.5 billion of the COVID vaccine next year, which is down 64%. And they have some interesting assumptions there. Just some funny. Good morning, everyone. Some funny assumptions we'll get to in a second that I thought were really, I've never seen stuff like that before, but it sounds like Pfizer's assuming COVID will go away, which is good news for all of us. It's not good news for Pfizer, right? But it's good news for all of us. the less Pfizer makes in money, the less sick we all are, which is good. So they're saying Paxlovid will sell 8 billion, which is really weird because last quarter was pretty bad. In fact, it seems like it'd be really hard for them to sell 8 billion given they're not even run rating at 8 billion, and it seems to be dropping precipitously. So that seems like I'm not going to listen to that. That seems way too optimistic. But I'll give them a little benefit of the doubt and adjust my numbers to say 6 billion. I would think less than that, but I want to give some deference to their guidance. But I know that there's some downside risk to that. So they're saying that there'll be sales through traditional commercial markets. So that means that you will have to pay, or your insurance will have to pay for Paxlovid or Comirnaty. And I think what their goal was to actually charge insurance quite a lot more than they would charge the government. So they might get a lot less units and still be able to hit these numbers of 8 billion and 13, I want to say 13.5 billion. So that's the idea there. So I'm going to stay a little bit below those two numbers, but I think that's kind of where Pfizer is. Take a look at these assumptions. These are really humorous. These are normal things you would see, but now there's a 2023 guidance for Comirnaty, which is the estimated proportion of the U.S. population that receives a vaccine. So really interesting way to put it, 24%, 31% last year. Decrease due to fewer primary vaccinations and lower compliance. Estimated number of doses per vaccinated person per year on average, 1.3. Estimated Comirnaty market share, 64%. U.S. demand, 65 versus 92 last year, etc. So it'll be really interesting to see what'll happen in 2023. My guess is they'll probably miss these numbers. But getting management's tenor on the conference call will be pretty important. The site I'm using is my own site called Godel. It's in beta testing right now. We're looking at Pfizer's earnings report, which was just released. It's earnings season for any of you who are interested in finance. All right, Eliquis. Look, a little light maybe, a little light. Prevnar. Prevnar was Pfizer's biggest product for a while. Then COVID hit. Primary care, is that where we're putting Prevnar now? Ooh, big quarter for Prevnar. Probably some catch up now that COVID's kind of receding, but all right, Paxlovid. All right, Ibrance, this is their breast cancer drug. It's been a bit weak for a while. I'm surprised I had it growing, because I think it's been shrinking a tiny bit. Vyndaqel, that's their big rare disease drug. It's now their biggest specialty care drug. So Vyndaqel, a great quarter, wow. Really big quarter there. Trailing 12 months, or well, now it's just 2022 revenue for Vyndaqel, 2.4 billion, wow. Great product. Xeljanz has been a disaster as people get scared of JAK inhibitors now, or at least Xeljanz. Enbrel continues its decline to zero. Pfizer has ex-US Enbrel rights while Amgen has the US rights. Xtandi, which is not a good deal for Pfizer in my opinion. Xtandi just keeps nudging ahead a little by little. So that's, I think, a record quarter for Xtandi. Inlyta, ooh, big softness there. They may no longer be disclosing some of these, so we'll see. We're getting to products that are less and less important for Pfizer. The big ones are all, we've just looked through all the big ones. They have a bunch of biosimilars, which is kind of funny. And here's one, Inflectra, that seems to be declining pretty quickly. Ruxience, this is the Rituxan biosimilar. Ruxience. All the biosimilars seem to be quite weak. This was supposed to be a big market for pharma to sort of catch up with biotech, and it just hasn't seemed to be what anybody wanted. Sutent, which was one of the first kinase inhibitors, now generic. Oh, there's Oxbryta. Oxbryta is acquired in the Global Blood Therapeutics acquisition, GBT. I don't have a lab coat, that's funny. I wish I had a formula that allowed me to not sleep, that would be great. Let's see, do they call it immunoglobulins or do they just have, I'm not sure. They're Nurtec now, also as a disclosed product, so we got that. That is the drug they got from Biohaven. Nurtec, ODT, Vidura. My neck is still killing me. So I don't know what they're doing with, oh, there it is, immunoglobulins. All right, Premarin, a very old drug from the old company American Home Products, which very few people here will remember, unless you're a student of business or pharmaceuticals. American Home Products was a company from a long time ago, changed its name to Wyeth, and then was acquired by Pfizer. Premarin is estrogen, made from horse estrogen actually. Still being used, surprisingly, even though it causes breast cancer if you use it too much. Medrol 93. Nimenrix. I think that's a meningitis vaccine, I'm not sure. Lorbrena, it's a new kinase inhibitor for oncology. Lots of little products. Pfizer's like quite diverse with these bulky little products. I'm sure Pfizer would rather be a little more streamlined. And this is after their spin-off of Viatris or Upjohn, which created their merger with Mylan to create Viatris. So Pfizer earnings, reaction to the earnings, not really significant, kind of basically a non-event, but still very important for us analysts to look at very closely. Bavencio starting to get relevant in the PD-1 game. Maybe not too relevant, but starting to contribute a little bit. VFend 55. This is an old drug. Aromacin, another old drug. Surprised they still disclose Tobias. I bet they won't be back next year. Trazimera is their Herceptin biosimilar. You can see the biosimilars, just not doing that great. No other way to say it. Raftovi and Mektovi also suspect, and you gotta wonder if Pfizer regrets the Array acquisition. It's gonna turn out, I think, that Pfizer's COVID boom will not really have changed the company very much, which I think a lot of people will be surprised by that take, because it was an enormous amount of revenue, right? Let's see, for 2023 to the beginning of COVID, you're looking at $86 billion in revenue. But remember, that's not a high gross margin product. So they do have to split with BioNTech. So if you think about that plus taxes, maybe you're looking at 30 or 40 billion, but Pfizer is wasted, like the Array deal, right? And the Medivation deal. Pfizer kind of overpaid for a number of assets. So one would almost say that, COVID's going to basically be a non-event for Pfizer, which is kind of crazy to think about. If you had the biggest product in pharma history, and the problem is they just kind of squandered these cash flows, in my opinion, with kind of somewhat bad deals. Sometimes you have some pretty good deals too, but in general, they've done sort of bad deals. I'm not sure they got a good deal out of Biohaven either, for example. Maybe there'll be variants of COVID. Maybe there won't be. I mean, they're telling us that 2023 is going to be a pretty bad year. So I'm hoping COVID just goes away. But, it's certainly possible that, COVID will be here forever, and there'll always be, a need for COVID products. It's possible, for sure. Okay, so quarter was 23.9 billion. Gonna make a few adjustments here for the other section. Let's take a look. Other specialty care. I think that's other hospital. Other primary. Other infectious. Center one. Oh, I gotta add Oxybrita. I saw a center one here somewhere. There it is. Oncology, and now Oxybrita, which is 73 million. All right, so 24,290. I think I've got some mess up in here somewhere, small amount. Oh, I think I see it now. Okay. And Desponza. Okay. 24,287 and 24,290, so pretty much the same number. They sometimes have a rounding thing, which is kind of annoying. Okay, cool. Now let's look at margins. So non-GAAP cost of goods sold were roughly the same. Really big COGS difference for me because I didn't think Comirnaty would have the catch-up quarter that they had, so margin's a lot lower than Pfizer would have wanted, all the way down to 60%, which is kind of like when they had tons of COVID revenue. That's the kind of margins they had. Spot on the SI&A. We'll take a look at R&D in a minute. And then we'll take a look at taxes. Huh. It'd be interesting to see this income statement. Oh, this is the wrong quarter. Okay, good. Thought some of these numbers looked off. All right, 9475, 4414, so a little higher there. 656. Okay, good. I was very confused for a second how they could hit that net income number. Okay, here's R&D. 3615. And almost no taxes for Pfizer. Wow. It's amazing. Lucky dogs, huh? We all gotta pay taxes, but they're paying like no taxes. Oof. All right, so yeah, roughly a 12% tax rate. Can you imagine? Subscription plan for boosters. Yeah, I guess I'm having a hard time seeing how they can hit their guidance number. But, you know, I am more bearish on the COVID vaccine than, financially bearish at least, than I guess they are. So, but even with their numbers, it seems hard to hit what they're talking about. It could be new products. It could be Prevnar, RSV, etrasimod, meningococcal. It has to be these new products that'll meet the gap here, but I'm still short several billion. About 3 or 4 billion at least, so those new products might do 3 or 4 billion. We'll see. Yep, not a big reaction. Merck's Prevnar competitor. We'll just see how they launch. Pfizer's got a little bit of mind share. Prevnar. I think margins for Pfizer have to go up, kind of back to their old 80%. But I guess it depends on how fast COVID disappears. Okay, so this is roughly their guidance. $325 to $345. I've got $340. So yeah. I don't know. I think if you zero out the COVID products, that's kind of a decent way to look at it, to be honest. Then you'd have to bump the margins and adjust the costs, obviously. But now you're looking at, not much earnings. Let's see, let's bump these. You also have to look at the new products, because the new products are coming. And you could put kind of a little multiple on this number, which is $2. Looks like Pfizer's kind of a little overvalued regardless. Maybe fairly valued if you're lucky. Should we listen to the call? I have two screens. Oh, it starts at 10? Perfect. 3 minutes. Let's take a look. Nice. Trap Classic. Yeah, it looks like I mean, I don't know if Pfizer's being delusional that they can hit these numbers still. To me, my gut reaction is that they're way too optimistic and that COVID will just disappear. But I've wanted that for a long time. Part of that is a psychological coping mechanism.
Good day, everyone, and welcome to Pfizer's fourth quarter 2022 earnings conference call. Today's call is being recorded. At this time, I would like to turn the call over to Mr. Chris Stevo, Senior Vice President and Chief Investor Relations Officer. Please go ahead, sir.
Thank you, Chelsea. Good morning. Welcome to Pfizer's fourth quarter earnings call. I'm joined today by Dr. Albert Bourla, our Chairman and CEO, Dave Denton, our CFO, Dr. Michael Dolston, President of Worldwide Research and Development and Medical. Joining for the Q&A session, we also have Angela Huang, Chief Commercial Officer and President, Global Biopharmaceuticals Business, Amir Malik, our Chief Business Innovation Officer, Dr. William Pao, our Chief Development Officer, and Doug Lankler, our General Counsel. Before we begin the call, I want to remind you of some logistical items. The materials for this call and other earnings-related materials are on the Investor Relations section of Pfizer.com. You see our forward-looking statements disclaimer on slide 3, and additional information regarding these statements and our non-GAAP financial measures is available in our earnings release, as well as in our SEC Forms 10-K and 10-Q under Risk Factors and Forward-Looking Information, factors that may affect future results. Forward-looking statements on the call are subject to substantial risks and uncertainties, speak only as of the call's original date, and we undertake no obligation to update or revise any of the statements. With that, I will turn the call over to Albert.
Thank you, Chris. Hello, everyone, and thank you for joining us today. During this morning's call, I will touch on some of our highlights from 2022 and share some thoughts regarding Pfizer's exciting near and long-term growth plans. 2022 was an outstanding year for Pfizer on multiple fronts. We exceeded $100 billion in revenues for the first time in our 174-year history. We maintain our industry-leading clinical success rates and further improved our cycle times, which were among the industry's best. We were named to 10 different best employer lists, including those published by Forbes, LinkedIn, Glassdoor, and others. And most important, more than 1.3 billion patients around the world were treated with our medicines and vaccines, a truly humbling achievement. Our key growth drivers for the full year 2022 included global sales of Paxlovid, strong growth of Comirnaty in developed markets, the launch of Prevnar 20 for the adult population in the US, the continued strong growth of Eliquis globally, the strength of our Vyndaqel family globally, and the addition of newly acquired products, Nurtec ODT, Vydura, and Oxbryta. Looking ahead, we foresee strong operational growth of 7 to 9% in 2023, excluding revenues from our COVID-19 products and the impact of foreign exchange. We expect our potential new launches, newly acquired products, and in-line products will all contribute to this growth. These projections include our forecast for several important potential product launches, including our RSV vaccine for older adults, potential Prevnar 20 pediatric indication, and products and candidates that came to us through recent business development activities, including etrasimod for ulcerative colitis, migraine, and Oxbryta for sickle cell disease. We are in the midst of an 18-month period during which we expect to have up to an unprecedented 19 new products or indications in the market. 15 of these 19 are from our internal pipeline, with the remaining 4 coming to Pfizer, as just explained, via the recent business development deals. Recognizing the importance of these potential launches, as well as those expected in 2024 to both Pfizer and the patients who rely on our innovations, we are increasing the support we are putting behind them by investing an incremental $1.3 billion. Dave will provide more details in these investments during the presentation. One example of a product that is already benefiting from this additional support is Cibinqo, which recently has seen an improving growth trajectory that we expect to continue through the course of 2023. In the fourth quarter of 2022, Cibinqo's new-to-brand prescriptions grew 84% sequentially, the fastest growth rate in the class. We have started 2023 with 55% commercial formulary access, and we expect that access to continue to improve during the year, especially with the upcoming expected expansion of the US indication to include adolescents 12 to 18 years old, if approved. We also introduced a new direct-to-consumer campaign in November, which has increased patient awareness of Cibinqo and led to more patients asking their doctors about it. We look forward to the expected US launches of etrasimod in ulcerative colitis and ritlecitinib in alopecia. Launch of Abrilata, our biosimilar to Humira, to further expand our franchise in immunology this year. Doctors are not only interested to hear this year's guidance, but also to understand the long-term growth prospects.
Oh, wow. 2030 non-COVID revenue.
Between 2025 and 2030, and our long-term projections for our COVID-19 products. We will try to address.
He's cutting out. I don't know why. It's very strange. Maybe it's my sometimes streaming while I'm streaming doesn't go well.
From our internal pipeline to generate 2030 revenues that will more than offset the expected LOE losses forecast for 25 to 2030.
25
The
billion.
potential
in
20
EV.
billion
Come on.
in this chart is a risk-adjusted
So
number.
silly.
I would also point out that some of the potential launches are expected to be bigger contributors to our growth than others. And if all 15 were to achieve their full potential, this figure could go even higher. In addition, we believe we have the ability, if successful, to add at least 25 billion of risk-adjusted revenues to our 2030 top-line expectations through business development activity. As we have said previously, we believe the deals we have already done for Arena, Biohaven, Global Blood Therapeutics, and Reviral have the potential to get us more than 40% of the way there, with approximately 10.5 billion in expected 2030 revenues. I am very pleased to see that the analysts' consensus expectations for the 9.5 billion, closing materially the gap that previously existed between internal and external expectations. 4 of these products have already low 23. We also have more than enough capital to invest in the additional opportunities needed to meet or exceed this target. And of course, we have many more potential vaccines and medicines in our pipeline, with numerous launches expected in the 24 to 2030 timeframe, if successful in clinical trials and approved.
More vaccines.
Some of the most promising assets include our oral GLP-1 candidate for diabetes and obesity. All of them are under this dotted box XB. Potential combo vaccines for flu, COVID-19, and RSV. Our potential vaccines for Lyme disease and shingles. Multiple new oncology product candidates, including IRV471 and our CDK4 inhibitor for endocrine receptor positive breast cancer, our gene therapy candidates for hemophilia A, hemophilia B, and Duchenne muscular dystrophy, our pan-hemophilia A and B antibody treatment, and many more. If approved, we expect each of these to be key incremental contributors to our growth aspirations through 25 and beyond. Even without any of these additional potential projects, we expect our 25 to 2030 revenue CAGR to be approximately 6%. And if some of them are successful, the CAGR could exceed 10%. About expecting 2023 to be a transition year, representing a low point in our COVID-related revenues. Let me provide a little bit more color on that. I will start with Comirnaty in the US as an example. In 2022, 31% of the population, or 104 million Americans, received an average 1.4 doses of COVID-19 vaccines, for a total of 144 million doses. Comirnaty's share was 64%, or 92 of these 144 million doses, as you can see in the first column. Purposes for COVID during this year. This drop is due to expected fewer primary vaccinations and reduced compliance with recommendations. We expect they will receive about 1.3 doses per person on average in 2023.
1.3
The drop
doses.
is because fewer people are expected to receive their primary doses, and for the most part,
On
only
average,
those who
how
are
many are you gonna get?
older or at higher risk are expected to continue receiving more than one booster per year. This should result in about 102 million total vaccine doses administered in 2023. We believe Pfizer will maintain at least its 64 market share and therefore expect about 65 million doses of the Pfizer-BioNTech vaccine to be administered in 2023. In 2024, we expect the utilization rates and market share figures to stabilize and come in roughly the same as in 2023. Then, starting in 25 and continuing in 26 and beyond, we expect to see an increase in COVID-19 vaccination rates, assuming the successful development and approval of a COVID-flu combination product. A successful introduction of a COVID-flu combo could over time bring the percentage of Americans receiving the COVID-19 vaccine closer to the portion of people getting flu shots, which is currently about 50%. Outside the US, we expect these general trends to be similar, with some variations from country to country. So, what does this mean for our revenues? We expect 2023 to be a transition year in the US. In 2022,
Oh, wow.
we sold at pandemic prices
Yeesh.
more doses than were eventually used. This resulted in a government inventory bill
I wonder if that's
that we
bullish
expect to be
for
absorbed
Pfizer.
sometime in 2023, probably the second half of the year. Around that time, we expect to start selling Comirnaty.
So they're basically saying they're going to do like 20 billion in 2024. That is so weird.
Commercial price to remain relatively stable with only inflation-like price increases.
They're definitely not saying COVID's going away.
Now, let me briefly run to Paxlovid.
That's bullish.
In 2022, we estimate
It
that
might be delusional.
110 million COVID-19 symptomatic
But they're basically
infections
saying
were
COVID's here to stay
reported
for
in
the
the
next
world,
5-6 years.
China, treated with approximately 14 million oral therapy courses. Them with approximately 90% market share. Average was 86, but in the second half of the year, I exceeded the 9. Keep in mind that this reflects a full year of reported inflections, but only a partial year of Paxlovid.
Yeah, it's surprising that
Slightly at 2% annually due to waning immune protection of the population resulting from reduced vaccination rates. Similarly, we expect treatment rates to increase as awareness, education, and additional oral entries will grow the oral antiviral market.
pretty bullish outlook, gotta say.
Finally,
Pfizer might be
we
a good buy.
expect Paxlovid to maintain very high share despite additional competitive entries, given its strong benefit-risk profile and brand recognition. So what does this mean for revenues?
He's definitely Greek.
As with Comirnaty, we expect 2023 to be a transition year for Paxlovid as well. In 2022,
This is
we sold
either
at
very
pandemic
bullish or very
prices
delusional.
more treatment courses than were eventually used. This resulted in a government inventory build that we expect to be absorbed sometime in 2023, probably second half. Around that time, we expect to start selling Paxlovid through the commercial channel. We expect in years 2024 and beyond that the courses sold and used will align closely together within every year. There has been a great deal of speculation regarding the new but uncertain market opportunity for Paxlovid in China. So let me share what we are seeing. We have an agreement with one company to import and distribute Paxlovid in China, a local company, and we have a manufacturing agreement with another local Chinese company for Pfizer shipped only tens of thousands of courses to China in fiscal year 2022. From December, which is the first month of our non-US fiscal year, through March, we expect to ship millions of courses to meet local demand. We expect we will be able to sell effectively under government reimbursement through end of March.
I don't think
And
Paxlovid is going to be a big
China's
product
recent
regardless.
decision not to include Paxlovid on the country's natural drug reimbursement list, we expect to offer the product on the private market after April 1st, unless, of course, a listing opportunity opens up before then. Lastly, I want to point out that while we are expecting increased utilization in all regions of the world as infections increase, we are not including any major non-US or non-China contracts in our 2023 forecasts. Let me close with a few thoughts regarding our scientific engine. R&D continues to be the lifeblood that fuels us as a company, which is why we plan to increase our R&D spend by at least 12.4 and 13.4 range, billions range. In addition to the increased investments, we are taking steps not only to further improve our industry-leading success rates, overall return on investment and R&D productivity. As you have seen in the last year, we continuously prioritize our pipeline to focus on the assets that represent potential breakthroughs and have the potential for generating higher returns, putting more capital behind larger opportunities like GLP-1, flu, elranatamab, and others. we are at an inflection point, and we are at an inflection point to act from a position of strength with our best-in-class R&D productivity, a robust pipeline of
Not
innovative
best in
assets,
class.
and one of the highest R&D budgets in the industry. With that, I will turn it over to Dave to provide details on our fourth quarter performance and our outlook for 2023. After Dave, Michael will provide an update on our R&D pipeline. Take it over, Dave.
Great, thank you, Albert, and good morning to everyone. Albert has already taken you through many of the key drivers of our full year performance, so I will focus my opening remarks on some key highlights from the fourth quarter. Revenues grew operationally 13%, primarily driven by Comirnaty's strong growth in developed markets, following the slowdown in deliveries that we discussed in the third quarter ahead of the rollout of the bivalent booster. We also saw very strong performance from Paxlovid outside the U.S. and the ongoing launch of Prevnar 20 for adults within the U.S. Excluding direct sales and alliance revenues related to our COVID-19 products, Pfizer's revenues grew 5% operationally in the quarter, and if recently acquired products from Bio revenues were up approximately 3% in Q4. Reported diluted earnings per share this quarter grew 48% to 87 cents, while adjusted diluted earnings per share of $1.14 grew 69% on an operational basis. R&D expenses compared to last year's fourth quarter. Once again, in the quarter, foreign exchange movements significantly impacted our results, reducing fourth quarter revenues by approximately $2.5 billion, or 11%, and adjusted diluted 4% compared to LY. On a full year basis, foreign exchange negatively impacted revenues by $5.5 billion, or 7%, and adjusted diluted earnings per share by 36 cents, or 9%. Turning now to 2023 and the financial outlook for the company. Let me first point out that our approach to guidance in 2023 is fundamentally different than prior years. Given contractually secured. On a total company basis, we expect revenues of between $67 billion to $71 billion, reflecting an operational decline. Importantly, we expect that revenues from our business excluding COVID will grow between 7% and 9% on an operational basis in 2023. That growth is projected to be split between contributions from our new product launches, our recently acquired products, as well as our inline portfolio. The total company revenue declines are entirely driven by our COVID products, which are expected to go from their peak in 2020 to their low point in 23 before potentially returning to growth in 24 and beyond. While patient demand for our COVID products is expected to remain strong throughout 2023, much of that demand is expected to be fulfilled by products that were delivered to governments in 22 and recorded as revenues last year. Now, I want to point out that our total company revenue guidance range is wider than what is implied by the 7 to 9% operational growth rate range for the business excluding COVID. The wider guidance range reflects the potential volatility that we see in our COVID product revenues, given that they could be significantly impacted by factors outside our control, such as the infection rates and the severity of the virus, as well as the timing for transitioning to a traditional commercial model here in the US. Now you can see on this slide our cost and expense guidance for 23. As I mentioned in my remarks at our investor event in December, both SI&A and R&D expenses are expected to be significantly higher, despite the fact that our overall revenues are coming down. Higher investments in SI&A are significantly focused on the successful launches of the large number of potential new products that Albert highlighted, as well as recently acquired assets. Additionally, the expected commercial launch of both Comirnaty and Paxlovid in the U.S. will require additional investments as we transition away from the government market. These investments are squarely focused on supporting the company's 2025 to 2030 growth aspirations. We also intend to invest significantly in our research efforts this year, with multiple exciting and potentially high-value programs receiving additional funding, including our oral GLP-1 programs, elranatamab, and respiratory combination vaccines. All of this spending to support our commercial and research activities, we believe will not only yield an attractive return, but also contribute towards setting us on a path to achieving our long-term growth goals. I point out that when you exclude revenues and expenses related to our COVID products, our expected operating margin profile this year is largely consistent with the prior year. This reflects incremental investments in SI&A related to launched products and R&D, as well as lower acquired IP R&D expenses. In 2023, we are investing in both R&D and SI&A in advance of revenue contributions from new products. Looking longer term, we expect this into this cost base as new product revenues begin to be fully realized, with margins improving as a result. I thought it would be helpful to outline many of our key assumptions built into our guidance. I don't intend to walk you through all of the elements here, but both slides 19 and 20 outline many of the details. In summary, these assumptions include strong revenue growth of 7 to 9% in our business excluding COVID, additional investments in SI&A and R&D to support Pfizer's near and longer-term growth plans, continued patient demand for our COVID-related products worldwide, with vaccination rates declining slightly and utilization of treatments slightly increasing, rephasing of the European Commission Comirnaty contract over multiple years versus full delivery in 2023, and finally, U.S. commercialization of the COVID products in the second half of 2023. In summary, as we enter a new year, our business is extremely strong, with many in-line, acquired, and expected launch products capable of driving strong growth coming in the future. We believe 23 will be an important year for Pfizer, and that is why we are deploying within our portfolio and within our pipeline, which have the potential to impact our growth outlook through 2030 and beyond. So with that, let me turn it over to Mike.
Thank you, Dave. Today, I want to set the stage for an anticipated catalyst-rich 18 months.
Oh, updated as of today. Cool.
Unprecedented strengths in our history, and I'm excited to share a high-level overview of an evolved strategy for Pfizer R&D to focus our resources on transformative programs which could be most impactful for patients. And continue to innovate our powerhouse capabilities development to further improve our industry-leading success. Our approach to rare disease, and we move from having a standalone research unit to aligning key programs finally advanced rare disease programs that do not fit into a core therapeutic area focus. At the same time, we plan to tap in actively pursuing biotech innovation and emerging innovation that fits strategically and accessing external assets that are differentiated. Taken together, we believe these actions will help position us to lead the industry in reaching more patients with the most impactful near-term blockbuster breakthroughs while driving forward the next wave of innovations. I'm pleased to share some examples with you today. we are pursuing potentially transformative efficacy with the potential launches of etrasimod in ulcerative colitis and ritlecitinib in alopecia areata, which both have the potential to be blockbusters, and a planned phase 3 study start of anti-interferon beta in dermatomyositis and other idiopathic includes 2 monoclonal antibody candidates for atopic dermatitis, which exemplify our multi-specific platform and in-house biomedicine design expertise. 2 assets currently in phase 1 clinical trials, each targets 3 cytokines in a single
Tri-specific.
or phase 1 pharmacokinetic profile of the average plasma concentration. For both molecules, the profile suggests that once a month or even less frequent subcutaneous dosing may be supported. There is potential for improved efficacy with more potent interleukin thymic stromal lymphopoietin to potentially cover more endotypes, or by blocking interleukin 23 to potentially enhance itch reduction. The phase study, we aim to bolster our 30-year experience in hematology with a strong pipeline that complements our inline portfolio and collectively has blockbuster potential. I will talk more about elranatamab and GBT601 in a moment. So we'll highlight here that we expect multiple data readouts for TTI-62 in hematological malignancies, 2 phase 3 readouts for inclacumab in sickle cell disease in second half of 24, and a phase 3 readout for marstacimab in patients with hemophilia A or B in second quarter of 23. Marstacimab has FDA Fast Track designation for both hemophilia A and B with inhibitors. If successful, we project submitting for the non-inhibitor indication in both A and B hemophilia in the third quarter of 23. We recently announced positive top-line results from a phase 3 study of our hemophilia B gene therapy candidate and expect a pivotal readout for our hemophilia A gene therapy in the first half of 24. We recently presented strong updated phase 2 data on elranatamab, our investigational B-cell maturation antigen or BCMA CD3 targeted bispecific antibody for relapsed or refractory multiple myeloma in heavily pretreated patients who had received at least 3 classes of prior therapies. Be a leader in the BCMA bispecific class, demonstrating patients with no prior BCMA targeted treatment, early and deep responses, and a manageable safety profile. Given factors currently limiting the availability of novel therapies in the triple class exposed setting, elranatamab has the potential to reach a broad and greater number of patients as an off-the-shelf option with reduced dosing frequency that is administered subcutaneously, offering more convenience than intravenous administration. With FDA breakthrough therapy designation granted last year, elranatamab could potentially be.
So Pfizer has their own PD-1?
Refractory population. Our clinical strategy aims to move to earlier lines of therapy and combination approaches, approvals to expand eligibility and duration of therapy. Now, to our next generation oral once daily hemoglobin S polymerization inhibitor candidate that's in a unique class and has the potential to expand the prophylactic treatment of people with sickle cell disease. Standard of care treatment rates have typically been low due to side effects, poor efficacy, or both. While Oxbryta made substantial progress in preventing hemoglobin polymerization or sickling, GBT601 is a potentially best-in-class candidate which may reduce both hemolysis and frequency of vaso-occlusive crisis. The most recent data from our phase 1 multiple ascending dose study showed improvements in hematocrit and hemoglobin levels over time, mean hemoglobin occupancy, and more than 41% for the 150 milligram maintenance dose. Well tolerated. We believe these results may be transformative for patients with a potential to achieve 35 to 45% hemoglobin occupancy, which is considered optimal for both hemoglobin oxygen affinity and preventing sickling, and approaches levels seen with gene therapy. This asset is also being studied in an ongoing phase 2 study with a seamless phase 2/3 design. We plan to start the phase 3 part in the second half of 2023. Next, we aim to expand our leadership in breast cancer with a pipeline of complementary next wave candidates. Our CDK4 inhibitor targets improving on CDK4/6 inhibition standard of care by maximizing CDK4 coverage. We're studying it in phase 1 in hormone receptor positive, HER2 negative metastatic breast cancer as a single agent and in combination with endocrine therapy. The majority of hormone receptor positive breast cancers express low CDK6, while CDK4 is likely to be a major cell cycle driver. We have seen that CDK4/6 inhibition can lead to neutropenia that requires more frequent blood test monitoring, mostly driven by CDK6.
Okay, so they're gonna take out the CDK6 out of Ibrance. Interesting.
Due to dose-limiting hematological adverse events. Dose rate in combination with fulvestrant or letrozole reached nearly 30%, and the clinical benefit rate was approximately 50% in 21 patients with measurable disease. The median progression.
I forgot that Pfizer has Talzenna. They don't disclose it as far as I know.
In 26 patients, including 5 without measurable disease. All patients were heavily pretreated with a median of 4 lines of prior treatment. All patients and 67% received prior fulvestrant. The asset was well tolerated. Only 15% grade 3 neutropenia and no grade 4. Here we show us for 47 weeks. She had received 6 lines of prior treatment, including CDK4. Randomized study in second-line treatment of estrogen receptor positive, HER2 negative metastatic breast cancer this year. Additional candidates are anticipated in the first half of 2023. Pivotal Ibrance readout in hormone receptor positive. Pivotal study start for ARV-471 and a phase 2 readout for our KAT6. Including candidates that harness our leadership in mRNA with an unprecedented number of milestones. Launch is shown here. We expect a phase 3 data readout from our mod RNA flu candidate vaccine study start. A phase 1/2 study of our shingles candidate, the first mRNA-based shingles vaccine program, began last week. In inflammation and immunology, as well as internal medicine, key catalysts include potential launches of potential blockbusters, a planned pivotal study start with interferon beta mAb, and data readouts in metabolic disease. We are also making good progress in our anti-infectives portfolio, including anticipating full approval for Paxlovid and planned study starts for both our second generation COVID-19 antiviral candidate, which may have no or limited drug-drug interaction, and our RSV antiviral candidate. In closing, to help the most patients as quickly as we can. Thank you. Let me turn it over to Chris.
Thank you, Michael. Chelsea, why don't you poll for questions, please? We'll take as many questions as time permits, and Investor Relations will be available after the call to answer any detailed questions that you're not able to address on the call itself.
Yes, sir. At this time, if you would like to ask a question, please press the star and 1 keys. Yourself from the queue at any time by pressing star 2. Once again, that is
So first question I had for you is, do you expect your COVID flu combo to be on an mRNA platform? And then I wanted to ask you on this RSV vaccine, there's a few players in the space, and just wondering if you think anybody could potentially get a preferential recommendation from ACIP, or is that really hard to achieve? And the last question is on your tri-specific monoclonal antibody. Is atopic dermatitis still a key focus for you? And if
Questions are more important than the press. Come on.
Both questions. COVID flu is mRNA, RSV is not, Michael, and then also what about the tri-specific antibodies?
So, as Albert spoke about Cibinco's expansion, we think there's room for many opportunities in atopic dermatitis. We wanted to highlight this as a really novel pioneering approach to go beyond the current antibodies in atopic dermatitis.
Oh, come on.
In both oral and topical segment.
And what about COVID flu that is mRNA and RSV that it is not an mRNA? How do you think that?
Well, I think it actually offers an opportunity, different platform. We think that the COVID flu, which contains 6 components, and we have made a real good progress in enrolling the study and will start to share data in the near future, has by itself, of course, a fast track forward pending data. But for the use of a potential triple vaccine, rather than adding up more and more mRNA, with the current technology that we have seen can lead to reactogenicity limitation and less tolerability, we think this flexibility to add on a protein may give you the perfect balance between efficacy and tolerability.
Thank you, Michael. And also, as you know, we are mastering multiple technologies. Fit for purpose here. Every time we feel that the technology. Flu and COVID, they are speed is of essence because there are variants that are coming. So mRNA is ideally positioned to address this challenge. With RSV, the virus is not changing that often. So a protein approach that has a brilliant tolerability profile, almost like placebo was when we saw the data, the responses of the vaccine arm compared to the placebo arm were very difficult to separate. With very, very high efficacy in our case, I think it's the best way to move forward. And that's the benefit of having multiple approaches and multiple technologies. Next question, please.
our next question will come from Terrence Flynn with Morgan Stanley. Your line is open.
Great. Thanks for taking the questions. Maybe 2-part for me. Was just wondering if you can provide any more details on the European vaccine contracts that were extended. Just wondering if you were able to secure a higher average price, given some of the headlines in the press earlier this week. And then latest thinking on Paxlovid commercial pricing in the U.S. as well. Was wondering if you could weigh in on that. And then the second question relates to economics with BioNTech on a combo vaccine. Just wondering how that will work in the event that you do go forward with a combined COVID and seasonal flu messenger RNA vaccine. Thank you.
I'll take the last one, and then Angela will answer the European vaccine and the Paxlovid. As you know, the flu vaccine that we're developing, BioNTech also have an economic position into it. And of course, the COVID vaccine, it is a vaccine that we are sharing with them. So we are not ready to make any comments about the economics about the potential COVID and flu vaccine. Angela, what about the European situation and Paxlovid pricing?
So for Comirnaty in Europe, as you know, this was a multi-year contract that we entered into with the Commission and the member states. And so I think the pricing there, is what it is for the contract. And we're in discussions with the European Commission regarding the 23 and what the deliveries will look like. Specifically for Pax, I think that was your next question. That is going commercial only later in this year, so we're now preparing what those pricing scenarios could look like, and we'll, share more at the right time.
Thank you, Angela. And also to repeat, I think David has mentioned it already, that in our guidance for this year, we factor only a portion of the European contract, so we spread the volumes into multiple years, although no agreement has been reached yet. Next question, please.
Our next question will come from Robyn Karnauskas with Truist. Your line is open.
Hi, thanks for taking my question. So just to drill down a little bit on Paxlovid, it looks like IQVIA numbers are implying about 9.3 million versus, say, the 12 million that you mentioned for 2022. So I was wondering, if you think about the split going forward, ex-US, could it be somewhat similar? Or do you think it would be more skewed, be more even between the US and ex-US? And my second question is, it also could imply that about half of your 20 million contracts were used in 2022. So how do you think about, could it be very minimal revenue as you draw down that Paxlovid, and will it go into a stockpile? Thanks.
Yeah, Angela?
Well, let's start with the US Paxlovid. So in 2022, when we launched Paxlovid, the first quarter of Paxlovid, the first quarter post-launch, we did not really have sufficient supply because we were still ramping up. So the total number of doses that were used in the US for Paxlovid is actually less than the demand. So that's why you see, we used about 8.6, 8.9 million doses in the US when actually demand was much more than that. Then you asked a question about IQVIA, the difference. As you know, IQVIA doesn't capture all the channels, so you're not going to see an exact match. But I think that in general for 2023, the number of doses that you will see for the US and for ex-US is just going to be a function of the contracts that were made, the deliveries that we have to make in each of the countries, and also the timing of the commercialization. And it just looks different in every single country.
Thank you, Angela. And also to emphasize that the 12 million in our calculations are a global number, not a US number. It's a global number. So I believe the 9 million of IQVIA is approximately in the US. And but I don't know if they have also estimations for outside the US. So next question, please.
Our
the
next
global number
question will come from...
I'm sorry for the clarification. It's a global number excluding China, the 12 that I mentioned. Next question, please.
Our next question will come from Jeff Meacham with Bank of America. Your line is open.
Hey guys, good morning and thanks for the question. Just have two. The first one's on COVID. When you look at the the 2023 demand and beyond really for both products. I guess I'm trying to better understand the volume side of the equation. Are you guys baking in the emergence of say, a new variant or maybe a change in behavior towards boosters? That's the first question. The second one is from a BD perspective. You know, Albert, you have a lot of cash to deploy. If your COVID assumptions don't quite play out, does that inform the number of deals or the size of deals? I guess I'm trying to get a view about where BD fits in your strategic priorities. Thank you.
Of course. First, what is the assumption about the disease? Because that's a fundamental assumption behind all these projections that we are doing. It is that the disease will continue in the foreseeable future, manifesting clinically the same way that it does the last 6-9 months. So there will be mutations, and there will be infections over there, and that the vaccination rates will be coming down because of lack of compliance, but will stabilize to a certain degree of people that they believe in vaccinations and they feel they are at high risk and they want to make the vaccines. At the same time, that the infections will slightly going up because when you have waning immune protection from the population, then you will see more infections and actually more severe infections. So these are the assumptions that we are using. We are not using assumptions that all the variants will escaping the protection of the vaccine, but we are using the assumptions that people will be getting 1.3 in the beginning and then going down 1.1, 1.2 doses per year as a normal booster. What was the second question? On the BD, yes. Clearly, business development is by far one of our biggest priorities, something that I personally take care of, and something that we have a very big team screening all the opportunities. I would like to ask Amir, who is responsible for that area, to make some comments about our priorities.
So Jeff, specifically to your question, as you heard Albert describe, we set this aspiration goal of $25 billion in 2030 from BD. We're over 40% of the way there, with approximately $10.5 billion of that number through the deals that we've done. And we feel very confident that we've got the financial flexibility on the balance sheet and the firepower to complete what we need to achieve that goal. We're going to continue to be disciplined about how we pursue that.
Thank you. I think we can move to the next question.
Next question will come from Steve Scala with Cowen. Your line is open.
Thank you. I have a couple questions. On page 4 of the release, Pfizer reiterated that non-COVID revenue growth in 2023 will be 7 to 9% and anticipates it will be split between launch acquired and inline products. That implies about $3.5 billion in incremental revenue growth. But in 2022, Prevnar alone grew $1 billion, and Eliquis and Vandequel together added another $1 billion. So with the launch and acquired products growing well, what does this guidance imply for the base business in 2023? It seems like a substantial slowdown is implied in the base business in the current year. Second question, has Pfizer learned anything from the Zeposia performance to date that would either increase or decrease its confidence in etrasimod? Thank you very much.
Yes. I would say, Dave, you want to say how is allocated the growth between inline, new products, and acquired products?
Yeah, really good question. I think if you look at each of those 3 buckets, we see growth from acquired products, we see acquired from new products, and importantly, we see growth in our inline portfolio as well. We do not anticipate nor do we see a slowdown from that perspective.
It's approximately 1/3, 1/3, 1/3. And Angela, what about the etrasimod?
I think we're really excited about etrasimod as a new entry in UC. It's a market that has been heavily dominated by biologics, and then followed by the use of JAKs, after the biologics. But really, in the earlier treatment, in the earlier treatment positions, there really hasn't been much innovation, and that's where we see etrasimod fitting in. I think the safety profile of etrasimod and its efficacy allows it to be used very well as an agent prior to the use of biologics. And that's where we see the ability to, tap into a new segment and to grow.
And because I'm very excited about the product, William, would you like also to add something about it?
Yeah, I would just say we're excited about the best-in-class profile. With the study that we did had a treat-through design. We hope and anticipate that we'll have no black box warning. We don't anticipate any requirement for titration. That'd be once oral dosing. 100% of our patients were in complete remission after a year, and we're in complete remission after 1 year. We're steroid-free, and we also have quick lymphocyte recovery after discontinuation. So we feel all of these features potentially make etrasimod a best-in-class profile.
Yeah, that's exactly the point. Best in class in an area that it is poorly served right now with current solutions. So we see a lot of opportunity. Let's go to the next question, please.
Our next question will come from Colin Bristow with UBS. Your line is open.
Hey, good morning, and thanks for taking the questions. I guess first question on COVID, and to sort of piggyback on what Jeff was asking. I mean, from your slides and comments, you're clearly expecting a sort of stable vaccine utilization rate when in the last 12 months, we've seen this number decline on a backdrop of a virus that is evolving to less clinically severe variants. And so what underpins your confidence in these longer term assumptions? And then also in terms of your COVID-23 guidance, you mentioned you'd guided to a sufficient range for variations in infection rates, etc. I was just wondering how much of an allowance you've made for the potential timing or reduction in contractual orders, as is the current situation with the Brussels negotiation. And then maybe just a quick one on the pipeline DMD. This feels noticeably in the background versus other assets at a similar stage. Just could you update us on your level of enthusiasm and commitment to this program, especially in light of the potential competitor approval in May of this year? Thanks so much.
Thank you. DMD, Michael.
We continue to be enthusiastic about gene therapy in DMD. I think we have actually published the strongest data on the two drugs with efficacy as well as a lot of biomarkers from our phase 1 across a much broader age group than anyone else. And, I can't comment when possibly someone else will get it registered, but we expect data readouts within possibly less than a year. And we think that this could be a very important drug, and we will have randomized data, which is not the case for any other application currently to have it that size and scope.
Thank you. As regards the assumptions of our COVID projection of the vaccines, for example, we are dropping the numbers. So instead of 31% of people receiving a vaccine, that was the actual in 22, we are going to 24. Then you are reaching a level of really people that they are really committed to the idea of getting vaccinations, and they are looked by physicians that they truly believe in the vaccination, in the value of the vaccinations. We are also dropping the number of doses per. So we'll go to 1.3, and then eventually, as the years progress, the number of doses that people will receive is small. Keep in mind that to get numbers like 1.2, you need a very, very small percent of the population to do 2 doses so that you can achieve something like that. Maybe 5% of the population to get a second dose, and then you will go to these numbers, as you will see, if you include also primary doses and children. So we believe the assumptions are very reasonable with the expectations that the COVID will remain as it is right now. So nothing more severe and nothing that will make it less disappear. And we take into consideration that the compliance with the recommendation of the health authorities, also because of the fatigue, will be less. Clearly, pivotal moment will be the introduction of combination vaccines, because the convenience of something like that and the fact that people are presenting themselves to receive flu vaccines, given that a combo vaccine will be in the same injection and will cost zero copay, likely will become the choice of many to get this full coverage. So we are quite confident on these assumptions. But of course, they are only assumptions. We need to wait and see. The other thing it is, on the Europe, you asked a few questions. I know that there are rumors, but I don't think that it is appropriate for us to make any comments while we are in negotiations with our partners in the Commission and with the member states. So we only said that we factor only part of the deliveries in this year instead of all the deliveries because we are in the middle of negotiations, but we can't make other comments. Next question, please.
Our next question will come from Trung Huynh with Credit Suisse. Your line is open.
Hi guys, morning. It's Trung Huynh from Credit Suisse. Thanks for taking my questions. I have a quick clarification on COVID and then my questions. So just on the clarification in those long-term COVID vaccine and PAX slides, do you expect any US government sales in 24 and 26? It just looks like commercial sales from your slides. So does that mean Medicaid, Medicare populations are bought at a commercial price? And can you comment on the margin change for the vaccine and PAX as you step up to that commercial price? And secondly, just following on from the base business question from Steve, we saw lower revenues ex-US for some important base business drugs. So Eliquis was down 19% ex-US, Ibrance down minus 22% ex-US, Prevnar, there was also a decline there. You've noted some product-related issues, but are you seeing anything more broadly in the US which is making it for a more difficult environment? And going forward, should we expect more normal levels ex-US for these products?
A quick one, because that's easy. We do not expect 24 and 25 and beyond to have governmental sales in the US. In fact, we think that not even this year, other than of some small deliveries that we have still pending with the US government from the coronavirus before, we will not see any US purchases. That's our assumption right now, that we will move into a commercial model that will cover all channels as with all other vaccines and products. Margin changes, we haven't said anything yet about Paxlovid, so I can't comment. Comment, you can calculate, we set the list price, you can calculate the net, and then you can make your assumptions on margins. We don't give margins on specific products. Now, a little bit on the lower revenues, about the revenues ex-US. Angela, you want to make any comment on that?
As you said, there were some specific reasons for why we saw what we saw for Eliquis, Ibrance, PCV. I mean, Eliquis specifically was the loss of exclusivity and our patent challenges that led to some generic entries at risk in both of the UK and Netherlands. I think Ibrance is a mature product, and so it goes through sort of the reimbursement and the pricing regulation that it typically goes through in Europe. And I think PCV in general, what we're seeing is that, at least on the ped side, not on the adult side, but on the ped side, vaccinations are not back up to where they are, where it was prior to the pandemic. So I think in all three cases, there were very specific reasons for what you saw, and we don't anticipate anything extraordinary or different in 2023. I think it's sort of business as usual.
Very good. Next questions, please.
Next question will come from Tim Anderson with Wolfe Research. Your line is open.
Thank you. I think one of the challenges for analysts modeling Pfizer is to try to understand what the flow through to profitability is from Paxlovid and Comirnaty. So I'm hoping directionally you can tell us how that looks going forward once you get past this transitional year of 23. So in 24 and beyond, is the profitability of that combined franchise likely to be higher, less, or the same as what it was in 2021 and 2022? And then a second question is on SG&A. How much of that increase was driven by inflation in 2023? And just any quick comments on European austerity measures on pricing.
Dave.
Yeah, so maybe on the COVID franchise, obviously we don't give profitability for each product, but you can imagine, as we stated before, on the vaccine, we split our gross margin with BioNTech. So therefore, that would obviously carry a lower profitability mix compared to a typical product. In Paxlovid, it's probably the opposite in the sense that we share the economics of that fully. So it's probably a bit on the higher margin side in general. That's kind of
and one, you can predict that, for example, in the first years, 21, 22, we had very high R&D expenses also. We maintain our R&D expenses in COVID. A very big part of our expenses in 23 is for COVID because we are investing. But you expect over time, those, unless if we bring new products, that will not be as high as. On the contrary, prices are going up. That says that margins could improve, but also SI&A, promotion expenses are going up, right? So without wanting to give direction from what it used to be 21, 22, likely we expect going forward to be higher the margins, but all of these equations will be in play. Next question, please.
Our next question will come from Mohit Benzal with Wells Fargo. Your line is open.
Great. Thanks for taking my question and thanks for all the clarification. Maybe one question if I can ask. So regarding the expenses for COVID business, and Dave, you mentioned that you will be essentially relaunching these products with the commercial scale and everything. So is there, how much cost, given that your COVID business is declining significantly this year, are you modeling any kind of cost cuts in that business, or should we model on dollar basis that's still the same? And is there any synergies you can achieve, especially for vaccine, with your existing Prevnar business, because if the channels are similar or not? And last part is, do you think you can do more share buybacks given the stock price at this point? Thank you.
Let me take the first two quickly. Of course, as you saw, the business is going down because of COVID, the average is growing. Expenses are going up because we are promoting new launches, including COVID. So right now, moving into Comirnaty in commercial and Paxlovid into commercial channels, now we treat them like normal promotional products, very sensitive in promotions at the beginning of their launch. So we are going very hard with promotions, TV, field forces, and all the other educational measures that we're taking when we do this type of launch. So there is clearly this piece. What about, David, are we going to buy back?
Yeah, so really good question. I think as we look at capital allocation at this point in time, we actually see a lot of opportunities to invest back into our business, both from a research perspective and importantly, getting behind our launches to make sure that we're doing all that we can to ensure that our growth trajectory in 25 and 30 and those goals and aspirations become reality. So I think our best and highest use of capital right now is investing in our business, both internally as well as from a BD perspective. I would say never to an incremental share repurchase, but that's not high on the priority list at this point.
And Mohit, also, you asked also about the synergies. Clear, there are a lot of synergies right now, both in the Paxlovid. Paxlovid is covered by a lot of physicians, and we have very, very strong primary care field force, and we have very strong vaccines field force that is covering all these physicians that are either vaccinated or prescribing Paxlovid. So clearly a lot of synergies in retail and in the medical profession promotions. Let's go to the next call, please.
Our next question will come from Chris Schott with JP Morgan. Your line is open.
Great. Thanks so much for the questions. Just building on some of the OpEx discussion here, I just want to make sure I'm understanding the OpEx dynamics properly over time. So I guess, should we think about 2023 as more of a one-time step up in OpEx and then much slower growth in 24 and beyond? Or should we be thinking about this as a couple-year process as you really get the pipeline and new products ramped, and then it's maybe more second half of the decade before we thinking about margin, bigger margin expansion or that OpEx slowing? I just want to make sure I'm understanding those dynamics properly. And then the second one was on the COVID flu combination. I guess, is your expectation that the tolerability of that will be similar to what we see with Comirnaty, or is there some trade-off of we could see maybe slightly higher kind of side effects with the 6 components you mentioned, but that's offset by the convenience? I'm trying to make sure I understand what your expectations are for that program. Thanks so much.
Thank you very much, Chris. To this scientific question, to Michael first.
Yeah, we think that, the tolerability will be well on par with vaccines used in the target population and be perceived as tolerable and convenient. As you described, the combination will attract the high volume of flu people to also be able in one shot to renew the COVID coverage, particularly with more and more variant coming. So we are very positive and think we are right in the balance of dose and opportunity there.
Thank you. And of course, the data will say, but right now, this is the profile that we are targeting. And we think it's easy to do it with 2 viruses. So to load enough so that you have very good efficacy and good tolerability profile. We believe it will be more challenging for 3, but of course, needs to be seen. And that's why we believe that our RSV being a protein and having such a good tolerability profile offers better combination of a triplet than a triplet all with mRNA. Dave, also there was this question that I think you touched upon it earlier in your script about how we see going forward the expenses of siRNA.
Yeah, so importantly, 2023, we're seeing a step up in siRNA. And this really, again, investments around the launches and the products that have been acquired, which we think are really important to really drive growth for the back half of the decade. So we're very focused on that. We do think 23 is probably the big year of step up from expenses, and then post 23, those expenses will grow more moderately after that.
Thank you very much. Let's go to the next question.
Our next question will come from David Reisinger with SVB Securities. Your line is open.
Yes, thanks very much, and thanks for all of the additional details that you're providing. So it seems like the 2023 guidance is conservative, which is encouraging. But looking to Paxlovid longer term on slide 11, I guess I'm surprised that the percentage of symptomatic patients that you expect to be treated with an oral therapy would almost double from 12% to 22% between 22 and 26, even though the pandemic is being viewed as being over. So I'm hoping that you could talk a little bit about those assumptions and what the denominator is. So when you say symptomatic patients, is that high risk / elderly that you're calculating the 12% on, going to 22, et cetera. And then in terms of the Paxlovid share, it was approaching 91% at the year end of 22, according to the slide, but only declining to 80% in 26 when there are several companies, both large and small, ranging from Gilead to smaller companies that are planning to develop agents to compete aggressively, and that could have implications for both volume and pricing longer term. So wanted to understand that. Thank you very much.
David, very good questions. Let me try to explain a little bit. First of all, it's not 12 going to 22. It's really 17 going to 22, right? The 12, which is in 22, it is a partial year. So it didn't include the full year. The real demand, it is, let's say, 23 full year, it is 17. And it's going up because of 2 factors. One, it is the small increase in infections. And as I explained, the assumption is that COVID will not disappear, will be there. But vaccine rates, vaccinations are going down. So that will create, will wane the protection, the immune protection of the populations. And that will manifest with a small increase, which is factor now at 2% based on our modeling, a small increase of both the infections and eventually also the severity. So that's one. So the second is that the more introductions of new entries likely will not happen before 24, 25, in the US at least. Will depend If EUA will still be available, which will depend if we will be in a state of emergency or not for EUA. But if we will not be in a state of emergency, which could be a likely scenario, there will be no EUAs, and we don't see in 24 any introduction. Actually, it's in 25, the introductions. The introductions, though, also, as always, are increasing the overall class share. That it's what also is driving. We are dropping market share, but we are increasing the volume. The last is, are we dropping the market share aggressively enough, or are we, let's say, very optimistic in dropping? The assumption here it is that we are the only one who have right now, for years, presence in the market with a label that is extremely strong, with 86% clinical efficacy against hospitalization and against deaths, high actually against deaths. So it's very difficult for anyone to reproduce this data right now. The studies will run forever likely and will be very large. So very, very difficult to reproduce something like that. So as a result, given that for years we will be basically the lion market share, plus the excellent profile, the loyalty that will be developed. All of that are telling us that it is very reasonable to maintain very high market share, and to have seen that in first-in-class entries in every treatment, from cancer to that compared to the second and third. It's easy to maintain 60-70% under normal conditions. Now that we have all these advantages, we think maintaining at 70-75%, I think is reasonable. Of course, we'll have to see. Next question, please.
I think it could be a little delusional.
Our next question will come from Chris Shibutani with Goldman Sachs. Your line is open.
Thank you very much. Two questions. One on Paxlovid, cross currents there between China in terms of the millions of doses that you described for your first fiscal quarter and a potential transition to a private market in China, and then the U.S. where a similar transition will occur to the commercial. Can you help at all frame what you think the relative contributions could look like in 23 and how that could progress? And then in particular with regard to the transition to commercial markets for the COVID franchise products, can you share any early color on the discussions or engagement that you're having with payers? What kind of dynamics? Any color there would be helpful, particularly in the broader context of a global pharmaceutical opportunity with many different therapeutics that will be on their list of budget items, obesity, Alzheimer's, etc. So any color on the discussions with payers would be helpful. Thank you.
Thank you. Angela.
Sure. Hi, Chris. So I think for Paxlovid, again, the time period, the way to think about it is in two time periods, from now till April, which is a reimbursed market, which gives us access to both public as well as private channels, and then after April, private channels only. As you heard, we have included in our guidance what we believe we can do in the first 3 months of this year. But given the fact that the back half of the year, it's going to be highly uncertain. It'll be a very dynamic market. We will, we'll continue to make sure that we have supply, but we'll have to, just wait and see what happens there. On the side of US, similarly, we will be transitioning this year. We will have a year where some of the revenue will be made through the completion of contracts that we made with the US government in 2022. And then part of the year, the revenues will come from the commercialization of Paxlovid. So you're going to see that play through, both of those dynamics play through. And then I think you had one more question.
Yeah, the payers, what is their reaction with the vaccine?
Yeah. So it's still early days, especially in the US, right? Because that's only happening, middle of the year. But what I can say is that we have had some early discussions already with agencies and reimbursement agencies outside of the US who have given us, earlier feedback. And even if you take a country like the UK, we've actually had very favorable feedback on the pricing that we've provided, and they agree with the cost effectiveness of Paxlovid. So I think we'll, obviously that's good feedback, and we'll be taking those learnings and those value arguments to multiple countries.
Thank you, Angela. Next question, please.
Our next question will come from Carter Gould with Barclays. Your line is open.
Great. Good morning. Thanks for taking the questions. And David, thank you for all the transparency on the underlying assumptions. I guess two for me. First off, just in terms of the upcoming, messaging around the end of the public health emergency, can you talk about the potential impact you see on your EUAs, access as well? I'm specifically thinking about Paxlovid populations in this period before we switch to a commercial market where the government's still, working through the inventory they have in hand. And then going to the COVID flu combination, just trying to better understand some of your assumptions here. Because I guess when we think about that 26-40% adoption number, it's some, either the incremental bump from 24 is 15% or the 40% absolute. Just kind of what that implies about how you think the underlying flu market will change. I guess that could imply 30% to 80% share within 2 years, but just wanted to understand kind of the underlying drivers there and how you think about that market evolving.
Thank you. Maybe I try myself quickly because you're running out of time. If there is an end of emergency, we don't think that will have any impact on current EUAs. Will have an impact on issuing new EUAs. I don't think that anything changes in the way that emergency or not, the way that the inventories will be managed or the access that patients will have in any of these treatments. Now, as regards if COVID flu, if the introduction of combination flu products will change the flu market, I think yes, will change. It's a major. Flu market was always a single market until now. And suddenly there is a chance that other respiratory diseases like COVID or RSV will come. So I think that will change. And now the step up, it is clear if we expect that, around 24, 25%, it is a population in the US that needs protection and is diligent enough, not believes, more believe, but they are diligent enough to follow the recommendation and go and get their annual booster for COVID. When they will present themselves, when the flu people will present themselves and they will be asked the question if you want flu single or flu with a combo, and they will be given the information that will protect them in a single injection at the same time, zero copay for COVID as well. We believe it's reasonable to expect that the 25% stable will become 30, so we will add another 5% of the population, and that over time that will move closer to the 50%. We projected 40 over there. So those are the assumptions that we're using. Next question, please.
Our next question will come from Kerry Holford with Berenberg. Your line is open.
Oh, hi, thanks. A couple of questions on vaccines, please. Firstly, on RSV, can you confirm you're on track to provide that second season of data ahead of approval and reimbursement discussions in May, June for the older adult vaccine? And can you confirm whether you've now filed your maternal RSV vaccine with the regulator? If not, are you waiting for the approval in the older adult setting first? And then just on the flu COVID combo, if we assume you have positive flu phase 3 data in the second half of the year, positive phase 1 combo data in the first half, would you expect to move the combo into phase 3, or is there the possibility you will not need a full phase 3 combo study to proceed to filing and approval? Thanks.
Michael?
Yeah, I mean, we always follow multi-seasonal vaccines, and we'll share the second season data as soon as it's available. Of course, there are many ways this can play out with combination vaccines, and which could lead to more regular vaccination rather than protracted. And on, you also asked about the, the flu COVID combo here.
Will they need a full phase 3 trial? So if we need a full phase 3, if we have both a flu and a COVID.
we expect that you need a phase 3 that is based on immunogenicity and safety, and not a large, long trial based on events. So we think we can complete that fast, and if anyone can do it fast, it's we. So that's very high on our list currently, pending data to move with light speed in.
Right, and there was a question on reinvestment of RSV, Krishna, I think.
Yeah, I think, Carrie, you asked if the second season durability data, how that'll impact reimbursement discussions. Also, if we submit it.
Yeah, I think it will impact ACIP recommendation. In vaccines, once you have ACIP recommendation or not, you're getting automatic access with all formularies without copay. So that, I think, it will be the key, what ACIP will say. And let's go to the next question, please.
Our next question will come from Andrew Baum with Citi. Your line is open.
Thank you. On Paxlovid, following commercial approval and the withdrawal of the EUA, will pharmacists prescribing... Could you just explain the reasons for the out-licensing of the TL1A inhibitor to Roivant? Apologize if I missed it. And then second, in relation to your multi-specific antibodies, your tri-specifics, this has been tried previously. I think AbbVie and J&J previously tried in RA and I think in psoriasis with TNF IL-17s, but they ran into an issue with binding affinity and they didn't have efficacy. Do you think you've managed to solve the issue here?
Andrew, the first one is simple. I don't know if the pharmacists will. It's very unlikely, I think, but I don't know. We don't have it in our assumptions right now. And let's go to Michael.
I'll start with Andrew. Great question. You touched my heart today. We have cracked it. These antibodies that I shared today have, first of all, pharmacokinetics like an excellent single antibody, but 3 in 1 product, and have very high potency, which you asked about, actually exceeding the marketed product substantially. So we think it's really something that we will move very quickly as we learn more of it. And, you know, you asked about TL1A. We think we have a very good partnership with Roivant that helps us to do more things within our pipeline. And you have heard Amir Malik earlier allude to that, you know, we have commercialization rights, ex-US Japan. We have, you know, about half of the value of this product. And we have a follow-on, a bispecific TL1A P40 that's active mechanism of Stelara. So we think we have such a richness in this space and really enjoy to build the ecosystem with others and maximize what we bring to patients.
Amir, you want to add something here?
The only quick thing I will add, Andrew, is if you look at how prolific our R&D engine has been, the total funding demand from all of the R&D programs that were generated would significantly exceed what we guided to as our R&D spending in 22 and 23. So in that context, we are going to be very thoughtful about how we prioritize. We have a robust process for that. And consequently, from time to time, you're going to see programs like the TL1A that have very clear scientific merit, but we think where sharing the cost, the risk, and capabilities with a partner is the best way to create value. And that's what we did in that situation. And we've had a long history of doing that in a number of other situations as well.
Thank you. Now let's move to the last question.
Our last question will come from Evan Seigerman with BMO. Your line is open.
Hi, guys. Thank you for squeezing me in, and I'm not going to ask a COVID question because I think they were all asked. So just looking at business development, when you did Biohaven, what were some of the characteristics of the deal that you want to bring forward in kind of your go-forward approach for BD? You know, how should we think about potential holes in your pipeline that you could fill with external deals? Thank you.
Mir, why don't you take this one?
Sure. You know, the Biohaven deal for us represented an excellent opportunity to leverage our capabilities, and specifically where we're capabilities in terms of our global commercial footprint that Biohaven as a company alone could not maximize, but where application of those capabilities could take Nurtec and the follow-on product to places and reaches for patients that they couldn't have gotten to alone. And also the way in which we structured that transaction began with an ex-US partnership, which we then expanded to take on the full global CGRP franchise, and also excluded some assets that were less relevant to us strategically that created a NewCo. And I think what you can take away from that is that we're going to continue to look for things that are scientific breakthroughs where we can add capabilities, and we're also going to be creative and disciplined about how we structure our deals. And we think that's going to serve us well as we complete our ambition against our $25 billion goal.
Thank you, Amir. So thank you, operator. In summary, let me close by saying, first of all, I feel extremely proud for the team in Pfizer that was able to deliver break all records in 2022. The highest ever revenues, the highest ever profits, the highest, more importantly ever, number of patients that we protected or treated with our medicines, the best ever reputation for our company, the most productive wave of R&D with 19 products launching in the next 18 months, the best R&D machine in terms of multiple measures. All of that we're able to achieve in 2022. Clearly, though, I believe that the best years of Pfizer are ahead because we are building on a significant capital position that we know how to deploy to create growth. We are building on an R&D engine that it is more productive than ever in the history of this company, a manufacturing engine that it is the envy of the industry, a commercial envy, a commercial engine that it is ranked again and again and again as the best commercial engine in the industry, and of course a mindset in Pfizer that is characterized by nothing is impossible. We can make everything possible. So with that in mind, I think that we are moving ahead, hopefully to an even more successful 2023. Thank you very much for your attention, your interest on us, and your support as shareholders. Thank you.
Thank you, ladies and gentlemen. This does conclude Pfizer's fourth quarter 2022 earnings conference call. We appreciate your participation, and you may disconnect your line at any time.
What the heck? Alright, so that was the Pfizer Q4 earnings call. Really interesting, a lot to take away here. Not 100% sure what to make of it. On one hand, just let me finish this chess game. On one hand, it feels like they're a little delusional. Let's see if I can get rid of this corporate music. All right. So yeah, on one hand, it feels like they're a little delusional about kind of the likelihood of their business sort of persisting post-COVID. They don't think there is going to be a post-COVID, right? They think that basically, oh shoot, this will last forever. Which, you know, a few of the other analysts, I say other analysts, I mean a few of the analysts on the call kind of poked at that a little and said, wait a second, is COVID never going to end? That seems pretty unreasonable. Oh shoot, let me try this. Bit of a risky gambit here. Is COVID really never going to end? That doesn't sound right. And they basically said, no, it's never ending. Which really is kind of out of control. All right, I won that game. So yeah, I do think that in 2023 you're going to get some people still vaccinating. The hardcore vaxxers, as somebody just put it. But it seems like, I guess we just don't know. You know, they're going to have to execute. Pfizer stock is only attractive if Pfizer's vision of COVID comes true, which seems, again, quite unlikely. given the circumstances. And of course, yeah, BioNTech is much more levered to this reality than anyone else. The actual commodity number for Q4 was very good, actually, but their guidance is for a big decline in COVID and Paxlovid revenue. The Paxlovid revenue is still, that guidance is way too high, I think. And they're talking about how there's been an inventory build. I don't know if Pfizer's a good short. I do think that, like most large caps, I mean, there's so many people looking at it, it's hard to see an obvious answer here. But again, the most surprising thing of the call is their notion that COVID revenue will come back and be persistent from 2024 to 2025 and 6 and 7 in 2028, which is very surprising. And it sounds like most of Wall Street, based on the stock price, doesn't really believe that's going to happen. But if you think about like Pfizer earnings power without COVID, I did some calculations, and maybe the answer is around $2 a share of earnings. So certainly the market is implying that there's some COVID revenue going forward, and I think that's fair, but not the level that they're saying. I think that if Moderna and BioNTech are shorts based on their COVID implied expectations, but I still think that you definitely have Pfizer isn't really up. It's only up 10 cents, so the market's, I think, up more than that, so really not a factor. Interesting. Yeah, there might be some persistent, for the older population, persistent COVID, but if you don't see it in the wild, if it just disappears from the wild, then the COVID revenue will go to zero, and I think that risk is significant. So, I don't know. Nice thing about the stock market is you don't have to make a move if you don't understand the situation. And I think it's an important thing to remember. The nice thing about evaluating pharmaceutical companies is it's very modular. You can look at each drug asset individually and value them and then sort of sum them. Yeah, so it's sort of puzzling and somewhat tantalizing. Pfizer's not stupid. Their management may be a delusional on this aspect, but the fact they're even willing to say publicly that they think 2024 beyond COVID revenue will be significant and will even rebound from 2023. And, they hedged it a little bit. They weren't that gung-ho about it. They were said potentially. But they put the numbers on a slide. I mean, it could just be a dream. But if it's not a dream, then Pfizer stock could actually be somewhat cheap. But it's hard to trust and believe that. We'll have to see it quarter by quarter. Hardcore vaccinators are a real patient population. Yeah. But if COVID disappears from the wild, then I really don't see a future. And I'm not talking about just 2023 or 24, but will people really still get an annual booster for a disease that doesn't exist anymore? That's a bit unlikely. Yeah, it's hard to believe in management, and I think Wall Street probably doesn't fully believe the COVID hype, but it doesn't fully not believe it either. So it's somewhere in between. Well, I saved my model, so if you want to pick it apart or download it, you can go on GitHub and get it yourself. Let me just upload the model here. What am I doing? Yeah, so it's uploaded now. You can go pull it down on github.com/Martin Shkreli/models. I didn't think that footage of the Pfizer exec was very interesting. I actually thought it was kind of sad. I'm going to go do some work on some other things. I'll see you all soon. Hope you learned something and had some interesting thoughts on the Pfizer Q4 earnings call. The takeaway is all the normal numbers were as expected. COVID quarter was fairly good for Comirnaty. Guidance was for a steep decline in 2023 for COVID revenue, but management is saying 2024 and 2025 will rebound, which is very intriguing. Maybe delusional, maybe overestimated, maybe right. We don't know. Have to wait for 2024 and 2025. I'm a bit skeptical of that, but it is quite intriguing, and we'll definitely give the Bulls something to believe in and latch on to. All right, we'll see you all later. Thanks a lot. Bye.